Okay, so today we have Curtis Gales with RBC. Curtis, tell us a little about yourself. How long have you been in it and your background?
Thanks, Tyler. Curtis Gales here, mortgage specialist with RBC Bank. I've been a mortgage specialist for coming up to 14 years now. Here in Saskatoon, I started with RBC back in 2006, but specifically mortgages I've been doing for up to coming up to 14 years now.
Okay. What did you do before mortgages?
I was your everyday banker. So in the office is doing bank accounts, credit cards, investments, that kind of stuff. So typically that's the transition. You do that first, and then you move into something specific. And I moved into mortgages. Seems like forever ago.
So let's say I have a house that is my primary residence and I want to buy second strictly for rental income. What's the minimum I would need down?
Okay, so it depends. If you're buying a home and you need the rental income from that property to qualify, you're gonna need 20% on that new purchase. However, if you're buying a home and you tend to live in it and you want to turn your existing home into a rental property, which happens a lot, that new home you're going to be buying, you can do so with a little as 5%, 5 or 10 or 15%. But what's going to be important to note about that is that you're going to be paying default insurance on that property because you're buying less than 20%. 20% is the magic number to have on hand to avoid default insurance, and also 20% is going to be the magic number to put for a down payment if you're buying a true rental, and we need to use the rental income to offset some of the costs associated with the purchase.
Gotcha. Okay. Next one. I want to buy a cabin and live in it seasonally. So it'll be a 3-season cabin. What's the minimum I would need to put down? And I already own a home.
Yeah. So that's fine. Seasonal properties are less marketable than full season cabins. Most lenders are going to want to put down 35% as a down payment, but there's a company called Sagan, formerly known as Genworth, and they're a default insurer. Sagan will actually allow you to put down as little as 10% down for that purchase, but they're going to want some information on that property. They're going to do their own appraisal on it. They're going to want some information like what's going on with water, power. Can you get access to it? There's going to be a lot of questions that they have on it, and so the more information we can have on that property is going to make that process smoother. And a lot of times we're going to want a little bit extra time to allow for financing as a condition, just because that the appraiser is going to want to be doing, or sorry, the insurer is going to be doing their own appraisal, and sometimes they can take some time.
Gotcha. Okay. So let's say I come into your office and want to get pre-approved. Would there be a fee for your service? Sorry.
No fee. No cost in setting up a time to have a mortgage discussion, whether you're buying your first home or you have a mortgage and you have some questions about rates. Maybe you have a mortgage coming up for renewal, but reach out. We can have a discussion. There's no cost.
Yeah. Then brings my next question. How do you get paid?
Commission. We at RBC, they pay us to go out and try to get mortgage business, bring it to RBC, and they pay us a commission when those deals close.
Okay. Next up, what are you recommending people do for mortgage rates right now? Are you recommending fixed? Are you recommending variable?
It depends. It depends on their personal situation. It's been a crazy year with interest rates for the last couple of years, obviously. And historically, 5-year fixed has been a really popular choice. But with right now, with us staring likely at a recession the next year or the next couple of years anyways, people are a little bit more hesitant to lock in for a longer period of time, especially with rates as high as they are, and maybe coming down a little bit. So to lock in for a longer period, people are a little bit hesitant to do so. But I guess the heart of the question is, or the heart of the answer is it's very client specific. This mortgage term might not be right for this person. Maybe you want to go into a variable because there's some uncertainty what's happening in the next couple of years. But if you're going to be staying up at night worrying about where your interest rate's moving, then variable is not going to be for you. You want to go into something that you can set, forget, and call me in a couple of years when it's up for renewal. Shorter terms are definitely more popular for the reasons I mentioned earlier, where there was uncertainty with the interest rates over the next number of years, and maybe they're coming down a little bit. So short term has definitely been a popular choice, but it's very specific on everyone's situation. So there's no right or wrong answer.
Okay. So my last question, why would I choose RBC for a mortgage? How do you differ from other mortgage lenders as RBC?
Yeah, one thing that I focus on with my clients is leading with advice. So sometimes that's lacking in the industry with interest rates going crazy for the last couple of years. Um, Maybe you haven't been getting the right advice from the get-go, and so that's something that you're going to be feeling some stress on. So having that advice, having that conversation, not just putting you into something that's going to be the lowest rate, but maybe comes with some less flexibility or less freedom. We want to have a discussion on what makes the most sense for you. So that's typically what I do with my clients is lead with advice. RBC specifically, what I love about working with RBC is that we have a team approach. So not only do I have the mortgage specialist team behind me, and we work out really well together, but we have some of the best partners in the industry. We got financial planning, retirement planning, investment advice. We have experts in small business, commercial lending. These partners can meet with you as well, free of charge, and offer their advice. And that's just a added value that I can bring to some of my clients' meetings.
So like almost a one-stop shop, you could say.
Yeah, exactly.
Gotcha. Okay, well, thank you for your time, Curtis. We'll be in touch, and have a good day.
Yeah, one thing I'll just mention before we close out. Right now, we're coming close to spring market. Interest rates are moving all over the place, and it makes sense to get in with the mortgage lender to talk about locking in a rate. Likely, we're going to see some rates maybe come down over the next little bit. Hopefully, fingers crossed. But it makes sense to meet with a mortgage specialist. Hopefully, myself or one of us at RBC to get that rate locked in. We can lock in rates for 4 months. Make sure we're getting you into something that is going to be comfortable for you. So it's one thing to make sure you can afford based on what the banks tell you, but it's also going to be something to make sure we're putting in something that you're comfortable with, a mortgage payment that you're comfortable with, a house that you're comfortable with, and you're going to get that answer when you sit down with someone and go over the numbers.
Gotcha. Yeah, so you want to lock it in to save yourself from those rate increases. All right.
That's right.
Thank you very much, Curtis.
Thanks for having me. Appreciate it.
Betcha.